Have you ever asked yourself on how to trade risk on and risk off markets? Well, if you are starting to trading, or if you even are, a little advanced into trading, you may be asking this question, especially in these moments of conflict, war, and etc. Here are 3 tips for you to trade risk on and risk off scenarios into the market. Well, first, before we even start, you need to understand one thing. Risk on means when the market is embracing risk. So that is, it's looking to buy stocks, equities, it's looking to buy index like S&P 500, Nasdaq 100, Nikkei from Japan. It's looking to buy perhaps Australian dollar, New Zealand dollar, or even some of euros as well. On the other side, we have the risk off. This is when the market is a little bit chaotic and they don't want to take risk. So therefore, they step back from stocks, indices, and other currencies I've just told you, and they prefer to get something a little bit more safer, and that is that yellow metal that you're thinking of. It's the gold. Yes, so gold as well as US dollar that have been, for ages and ages, the really safe haven currency around the whole globe. Also Japanese yen, CHF, and a few other ones like bonds and treasuries, etc. So that now you know what to trade when the risk on and what to trade, what's the risk off. Here's how to identify. This is the 3 tips you need to note down. So get your notebook and note down those things. If there is chaotic, if there is war, if there is conflicts, this is a risk off scenario, okay? So remember when Russia and Ukraine started to fight, that's exactly a risk-off scenario, because there is too much risk into the society. Therefore, there's too much uncertainty of what potentially can happen. Therefore, the market looks to buy the yellow metal and the green dollar, okay, from USA. The second point is when there is uncertainty around the monetary policy, or when there is uncertainty about the inflation, okay? So yes, I think you're getting what I mean. It's always about uncertainty or certainty. What can possibly happen next? Do we know? No. So that's uncertainty. Therefore, we look to protect our capital, to protect the investors' capital, and therefore look into long gold and US dollar, CHF, and all of the other ones I've just mentioned as well. Now, the last tip and the most important one is always pay attention into the headlines. Just as we had today, US, sort of bombarded, as Trump say, obliterated the Iran, and therefore Iran and Israel entered into a ceasefire. That was only for a few hours, folks, because market sort of felt that pretty quick. So that's a risk on, back into risk on, and that's a very good example. So soon we had the Trump B-2 bombers bombing Iran nuclear sites. That was a risk-off scenario, because we don't know what can happen next. We really don't know what can happen next. Will that happen in World War III? We don't know. So therefore, gold goes up, US dollar goes up, and CHF goes up. Soon as Iran and Israel actually agreed on a ceasefire, market collapsed and it gets into a whole other direction, because now we know what can happen. They are friends now. They're not going to threat each other anymore. So therefore, it's back to risk. It's back to risk on. Therefore, Australian dollar goes up, New Zealand dollar goes up, US dollar goes down, gold goes down, bonds goes down. But that was just for a second, because Israel attacked Iran, and therefore market is awaiting and see now. So it's on risk off back again. I hope you could understand what is risk on and what's risk off. I will also have made a blog that is on the description of our channel, so check this out, or into the comments, into the comments, ping it. You can click on that and you will find the link for the blog, and where I explain a little bit more in depth and a little bit more, into the details, so you can have a look into how to trade risk on and risk off. Hope you liked. Don't forget to subscribe to the channel and give us a thumbs up. See you.